Do you know that 2023 can be once in a lifetime opportunity to make wealth and could be the time to increase your net worth tremendously? This might sound unbelievable to you, but wait, I have something to tell you. There is a popular saying that millionaires are made during recessions. It does not take much to realize that we are already moving toward that point. I mean, look at the newspaper headlines. Every other news article warns about a recession ahead. While it might sound like a negative thing, the truth is that recessions happen on a regular basis. If used correctly, it is possible that you could set yourself up for the rest of your life through some incredible opportunities and discounts. Let's talk about exactly what is expected in the next 12 to 24 months and the benefits that you could take advantage of, and precisely what you could do to make sure you are in the best position to make as much money as possible. First, let me explain what is a recession. Generally, recessions are accompanied by a significant rise in unemployment, a drop in wages, a loss in consumer confidence, and a decline in value across everything including stocks, food, energy, and services. Sometimes, a recession can have long-lasting impacts on the entire world. Along with the recession, usually comes a decline in earnings. Can you see? Every quarter company reports revenue and gives guidance about the future outlook. But lately, they have been cutting forecasts, bracing for slow, even negative growth, inciting recession risks at the highest pace in 10 years. That means if consumers earn less, they spend less. When companies see less demand, they begin to scale back on their expenses, with usually employees being the first to get let go. In fact, hundreds of companies across the globe are trimming their workforce. So in terms of your money and investments, as well as the information that you could use to make money, let me give you some financial tips to follow. Holding cash. I know holding cash can mean wasting away your money to inflation, but when every other asset is falling in price, sometimes cash can be the safest place to save your wealth. The reason is, many people forget that as recently as 2018, cash was the best performing asset. Had you just been saving money in a high-yield savings account, you would have far outpaced the market. Cash is now becoming such a significant part of the portfolio that even fund managers are just holding on to the highest amounts of cash since 2001. Citigroup says that cash is the only asset that investors could use in a recession hatch. Stocks. As of now, all three major indexes are down between 20 to 30%, with analysts such as JP Morgan believing that we have another 20% to go from current levels. However, if we take a look at history, since 1946, the average bear market drop was close to 30%, with the most severe having been in 2009, when S&P 500 fell by more than 57% from the peak. So once you combine the average with the recession, the bear market tends to do even worse, with an average drop of 34.8%, which, just for reference, we are down about 25%. That is to say, generally, the absolute bottom occurs when we see capitulation across investors. Usually, that is a time of the start of the recovery and things begin to bounce back. Real estate. Even though every area is different and some locations might continue to flourish, housing declines on the national level are actually incredibly rare. In fact, in the last 60 years, there have only ever been a few times when prices meaningfully fell by more than 10%. But now the general Wall Street consensus is that national housing prices are going to decline by 7%, with a worst-case decline of 10 to 15% should interest rates continue to increase. Of course, every market is going to be different. According to Moody's Analytics, the most vulnerable markets could see upwards of a decline from the peak. It is not going to make much difference for somebody with a fixed-rate mortgage who intends to stay in their property for another 5 to 10 years. But anyone who is looking to invest in or buy a house may begin to see some deals starting to come on the market. Things you need to consider. So here is what you should keep in mind during the recession period. Everything becomes less expensive. I know, people keep telling you that this is a bad time to invest since everything is falling 30%. But the way I see it, it is an opportunity to be able to buy those companies for a 30% discount. Warren Buffett really had the perfect analogy for this. He said, "When hamburgers go down in price, we sing. When prices go up, we weep." For most people, it's the same way with everything in life. They will be buying except stocks. When stocks go down and you can get more for your money, people don't like them anymore. So firstly, refrain your belief because a falling market could go to your benefit. Less competition. The fact is that when times are difficult, companies scale back, serve cash, and they play it safe. But this opens the door for smaller, more aggressive companies to stand out and take their place. For example, a study across 16,000 companies found that those who continue to advertise increase their value. More opportunity. Recession is a method of markets to weeding out the weak and bankrupt companies that are no longer able to sustain themselves in a recession. As a result, new and smaller businesses get an opportunity to continue to develop. Bull market. The truth is that with every bear market comes a bull market. Historically, the S&P 500 has fallen an average of 29 around the recession, with a median drop of 24%. But once stocks have found their low, their average return in the following year is 40%, and within 2 years, the markets have increased by an average of 58%. This means that investing on the way down is much more profitable than pulling out of the market and waiting. The long-term market is always recovered in every single example so far throughout history. Act before everyone. I know this sounds easy to think that you just invest in a recession, but the truth is that recessions are never confirmed until much later. For example, the Great Recession that began in December 2007 was not officially announced until December 2008, only a few months before it ended. The recession before that began in March 2001, but they did not call it a recession until November later that year. This continues for about a 6 to 12 month delay until the common masses actually know that it is a recession. But the thing that you need to do is to scale back your expenses. This means that you are trying to track the market and cut back the unnecessary spending and operate lean while you continue to reinvest as much as possible back into the market. Hold on to some cash. Best strategies during a recession also include what you would do if your income were to drop 20 to 50%. In that case, how would you make up the difference? I would suggest you hold on to some cash. I mean, even though your money is best to be reinvested, there is peace of mind that you would get by putting some cash on the sidelines in case to have something to fall back on. Protect your career. Your job is the best hedge against anything that happens. Frankly speaking, the worst case scenario for you is not the market going down, but it is the market going down at the same time when you lose your job and have to sell your investments at the bottom before they can recover. So now is the time to improve yourself, learn new skills, and double down on whatever you are currently doing. So that was all for today's video. If you're interested to invest or to start a business in 2023 and have no idea in which business should you invest in or to start, then watch this video about the best business with very high success rates. Thanks for watching.